So this is by far one of the most random videos you come across on YouTube that will really help you when it comes to trading and anything that has to do really with finance and investment. All right, so there's 4 important aspects that you need to learn with trading as per any other field, but 3 are of high importance and 1 is of paramount importance. All right, so I'm talking about experience as being important, knowledge as being important, capital as being important, but psychology as being the of chief importance. All right, now allow me to do this. Many people or many traders start off with this which is of course the search for knowledge. Now the search for knowledge is not bad. It's important. As for any field that you need to do, you will need to have a working knowledge of what you're actually doing. So many traders start from there, and then as soon as they acquire knowledge, they find capital. Right? Now, knowledge and capital combined without experience will lead to panic, because majority of the time, because you are not experienced or you have not made losses or you have not had the ups and downs of that particular thing, you are most likely going to end up in panic, and most traders quit immediately after this. I'm going to talk about the Dunning-Kruger effect, which is partly going to explain why traders quit very early on in the game. Now, you will find that some traders will have knowledge but no capital. So they probably, because they have no capital and maybe have done some demo trading and gained a little bit of experience, which is not really proper experience, they teach. And a lot of traders fall into this category. A lot of people don't actually realize how many traders lack capital. Now, it's not that they lack capital, it's just that they went at it the wrong way. This is what is supposed to happen. So the reason why I'm explaining this, or why I'm trying to explain this whole thing, is so that you know where to start and how to navigate this circle, because many people start here, go through there, and then get the capital. But then after they get the capital, still, if they don't have the right psychology to handle all of this, they'll still go back and start again looking for knowledge, and then they gain experience, then they get capital, then they lose the capital, and they start again, the whole cycle, again and again and again. So this is what I'm trying to say. What I'm trying to say is, start from this. You start from the most difficult thing to obtain. What's the most difficult thing to obtain? Is the capital to trade. Knowledge is available everywhere, all right? And experience is something that you can gain through other means, like trading on demo or trading on a prop firm. So the biggest challenge for traders is capital. Now, capital will make your experience much easier. So if, let's say, you manage to do a project or something that helps you to build money, right, instead of gaining experience immediately, because that would be gambling. So if you've got capital and you try to get experience, you'd be gambling. Instead of getting experience only, try combining the two, experience and knowledge. Gain them both at the same time. Now, how do you do that without using your capital? Because the idea is, at any point in time, you are not supposed to be doing all three unless you've already actually started to really trade, to when you've already begun to push. Okay, so you ideally want either to be looking for knowledge and capital, or capital and experience, or experience and knowledge, but not the whole three combined. So like I'm saying now, start number one with this. So this should be your number one. Gain capital. Find ways to generate income online, offline, wherever. Right? If you're doing a 9 to 5, don't stop doing your 9 to 5. Gather enough savings for this project. Treat trading like a business that you want to start, and then accumulate funds, set aside the capital that is needed for the business, right? And then now you need to accumulate knowledge and experience. Now I'm going to explain why it's important to generate both at the same time. Knowledge in itself could be textbook, right? And experience is not really separate from knowledge. Experience is knowledge through participation, right? So what you would do, or what I would do, instead of just reading the textbooks, instead of just trying to understand what goes on through textbooks and all of that, I will read the text. Let's say that particular day there is the non-farm payroll, NFP, right? You sit down, you read all about it. You know that there's news that is going to affect different types of currencies and all of that. So you are looking for the knowledge, right? You read about it, and then at the time that the news is released, you sit down, multiple channels open, multiple chats open, see the movement, see what is going on, confirm what is going on versus the knowledge that you got from whichever books you're reading. That will help you to navigate the space. Now, the most important thing which I'm going to talk about at the end of this video is the psychology part. Now, in order for me to talk about the psychology part, I have to first talk about the Dunning-Kruger effect. Now, the Dunning-Kruger effect is a well-known, I'm hoping some of you guys know about this. It's a well-known, cycle. What really happens when a person learns something new, right? Or is starting a new project, or is starting something. So this is what happens. During the first phases of starting something, or maybe let's say you've just heard about trading and just search your first YouTube video, you are so enthusiastic about it, you are so confident about it. As a matter of fact, you are more confident than a person who has been doing this for years, right? Because you think you have the holy grail of everything. You think you know exactly what it takes for you to be a good trader or a great trader. So during this time, you've probably caught most traders at this point here. They think they know it. They think they understand it. Why? Because they're just entering into the field. Now, when you start entering a field, I think you've seen this really. Let's say in class, right? You have the teacher or the professor, and then you have the overzealous student who just recently learned that or the definition of photosynthesis, right? So they want to tell everyone the definition of photosynthesis. They have absolutely no idea of the workings within photosynthesis, but they understand the definition, or they just know about the testing for starch and all of that. So this person will not stop talking about the thing, right? So this person, very little knowledge, but talks a lot because there's so much enthusiasm in him. And then the more they know, is the more they know that they don't know. All right. So then, usually after at this stage here, if you are talking in terms of forex trading, that is the stage where you hit a couple of losses there. Like you deposit money, you heard about trading, you are ready to make your first million, you've put out your calculator, you've been projecting millions, and then and then you realize at this stage that after a couple of losses, you are not going to make millions in 2 days or in 1 week. This is what happens. Your confidence falls, and you are where we call the valley of despair. And during this time is when many traders quit. This applies to many professions. I'm not talking about trading only here, but in any profession, this person who has more knowledge is actually more likely to quit than a person who has less knowledge. And even when you are looking back to the people that are at that stage, they know nothing, right? And you want to tell them, but you don't bother because they're like, why even bother? They will understand soon enough, right? Now, this is the hardest part, right? This is what is called the slope of enlightenment, where you are gaining knowledge. Now, the more you gain knowledge, the greater your chances of confidence increasing or improving. And it is at this stage that you start asking the necessary questions, right? And are open to understanding what is happening. So that's the stage of enlightenment, right? And then after enlightenment, there is then sustainability. So at that point, you now know what you're doing, or you now know what you're talking about. You are not as confident as you were when you started, because you've already, hit a couple of bumps. But at that stage, you can sustain your lifestyle. This is where few traders are. This is the reason why you have 95% of people there, and you have got 5% of people there. And the major reason for that is this, which is the psychology of any trade, whether it's forex trading or it's any amount of work that you're doing. That psychology is the key to everything. Now, I'm going to talk about the psychology of trading and how you need to be a master of your psychology. And I'm going to do this by a simple diagram. And this diagram talks about a very small but important aspect that I have put together called the positive confirmation bias in forex trading. Right. So at any given point in time in your trading, you are either right or wrong. Granted, that's what's happening here. However, you could be right with the right lot size, or you could be right with the wrong lot size, or you could be wrong with the right lot size, or you could be wrong with the wrong lot size. Now, of course, the sweet spot would be to be right with the right lot size, or to be right with the right amount of risks applied to whatever it is that you're doing. Now, say you've entered a trade, right? And say you've entered a buy trade, right? You enter into a market and you say, you click buy. Remember, you could be right, you could be wrong. However, this is the biggest challenge for most traders. Instead of looking at their trade as merely being right or wrong, they want the market to confirm what they want and not what the market wants. Now, realize that market opportunities exist for a limited amount of time. So time becomes the biggest factor in all of this. You could be right, but for how long are you right? You see, this is what many traders don't realize. The time aspect of whether you're right or wrong. Are you right? Yes, you're right. Have you placed the right lot size in terms of your trade? Have you placed the right risk measures? Yes. But for how much time will you be right? So then the biggest challenge becomes, you create your order, you place a buy trade, expecting the price to go up. The price goes up, but for 5 minutes, and you are expecting it to continue going up for the next 10. However, there's a new setup that says otherwise, that the trade is no longer valid. What do you do? Right? Instead of continuing to hold on that particular trade, that buy trade, exit. Why? Because very soon you're going to be wrong. Right? So don't have that positive confirmation bias. What will happen is, the moment you say buy and then it moves maybe for 5 minutes and it shows you that it's about to sell, you will argue. A lot of traders, what they do is they argue with what they see on the screen. Why? Because naturally, as a human being, or naturally as a trader, you are greedy. You want to have more. You want, more is better. That's what you believe. Like it or not, that's what your makeup, your biological makeup believes. You believe that more is better. So the moment you reach a certain point and there are signs that or there are red flags, literal red flags telling you that you're supposed to stop here, you continue. Why? Because you still want to reach that point. And every analysis you do, as long as you are inside a trade, you are trying to confirm your trade. You are not really trying to exit. You are mostly trying to confirm. So if you are able to master the psychology in your trading, all of this comes together very well. If you've got the right capital, the right knowledge, the right experience, if you can then combine that with proper psychology, and this psychology should not be based on just some rudimentary theories out there or whatever. You should put down your psychology or write it down into a piece of paper. This is what I am going to do. If I see this and this, I'm going to do that. So make it logical. Make your psychology logical. Once you do that, you are going to overcome most of this. And this comes to where? If you can, after having your slope of enlightenment, after getting enlightened, if you want to maintain this plateau of stability, right? If you want to create that stableness, you need to make a logic list of how you are going to enter your trade. You're entering, remember, either you enter the right trade, with the right lot size, or the wrong trade with the right lot size. Please never at any time be fooled into thinking that more lot size is good. It's never good. I've heard theories and sayings out there to say one trade can change your life. It's very true. One trade can change your life, but remember, it could change your life for the good or for the bad. And imagine losing thousands of dollars because of one trade, and because you just wanted to trade with a very huge lot size. So again, I've got other videos that are coming that I'll be explaining some of these things in much depth, but all I wanted to talk about today was start by finding capital, and then gain knowledge and experience, right? Gain knowledge and experience, and then after doing that, realize that at some point you shall feel despair, right? Don't give up. Continue gathering knowledge at that point, especially if you have the capital to back that up. You won't have much of a problem, right? Then you can continue there, and once you've reached that point of stability, make sure you deal with your psyche. Make sure you don't fall victim to positive confirmation bias. When you enter a trade, if you see signs that your trade is no longer valid, exit the trade. Don't try to confirm your trade or further confirm that you were right. All right, if you are wrong, you're wrong. Don't try to force the trade. All right, so I will come back again and talk about some of the reasons why some knowledgeable traders with capital and experience still fail at this game. But otherwise, I hope this video helps one or two people. Remember, it's not all about my way of thinking or your way of thinking or his ways of thinking. If someone can be helped by this, let them be helped. If you have got your own way that you feel like can help you, it's still fine. We are not all the same, but what I'm saying to you today is something that could work for you. It's been 10 years that I've been in this industry, and I've seen a lot happen. So just this could help one or two people. All right, all the best, guys, and see you.